right, all right. Good afternoon, you magnificent melon heads, you. I hope you guys are well. Happy Friday, everybody. It's my favorite time of the week, my Friday afternoon live stream to close out the trading week. I hope you guys are well. I see everybody is here in the comments. Hi, Mom. Hi, Dad. I love you guys. Man, a lot going on this week, a lot of news. There's stuff popping off in Europe, obviously. The energy markets are just a total mess over there. Things here in the States, I don't want to say they're quiet. I mean, politically, the US is always a circus, but markets in the US were kind of quiet this week. Couple of down days, couple of up days. Looks like a pretty good day going on today so far. We'll take a trip through the indexes in a minute. Next week, though, we could have fireworks next week because, well, on Tuesday, we've got our next CPI read. The CPI for September is expected to come out. Look for a lower number on Tuesday than we've been getting used to. And when I say lower, I, of course, mean that relatively speaking, we're probably going to look somewhere high sevens, low eights. I'm expecting another number below what we had. I think our last reading was 8.5, down from that all time high of 9 and change. Mostly driven by energy prices. Energy prices have come down quite a bit. And also keep in mind, we've got the base effect. This time last year, prices were rising pretty fast. So when you're doing year over year comparisons, when you have a previous month that had a very big jump roll off from a year ago, it makes the number look less this time around. But don't think inflation has peaked. That is nonsense. I just did a video earlier today about the oil market. I think energy prices are going to come roaring back in the fall big time. And I think that's going to bring this inflation story right back. I think that's why the Fed is sounding so aggressive with all their sound bites lately. They know that. They know what's going on in energy markets is do or BS, depending on how you look on it. It's fake. It's a dumping of the SPR. It's not going to last. Anyways, after we get CPI next week, then on the 15th, Thursday, when the first short-term treasuries roll off the balance sheet, the pace of quantitative tightening will double from $47.5 billion a month. That is a target rate. They don't always hit it, to $95 billion a month. Now, I want to take a minute, folks. And, I was talking about this on my Patreon live stream on Wednesday with my Patreon supporters. By the way, thank you guys. I know some of you are watching on the live stream. I appreciate the support of the channel. Um, Anybody who tells you they know what's going to happen next week when the pace of QT goes from 47.5 billion to 95, anyone who says, "Oh, I know what's going to happen," is full of it. Nobody knows, because this has never been done before. And understand, we're talking about an equation that has so many freaking variables in it, and you mess with one, it affects all the others, and the system starts hunting and seeking equilibrium. Nobody knows what happens next week. Now, I can tell you this. The last time we tried QT was 2018. All right. That's the last time we were engaged in quantitative tightening. And, well, that didn't go so well. We reached a pace of $50 billion a month, just higher than what we've currently been doing, what we've been shooting for the last 3 months. Right. We've been doing 47.5 billion. It was 50 billion in 2018. And they broke something. We had the infamous Powell pivot in December of 2018, where Jerome Powell very suddenly stopped raising rates and started lowering rates. A few months later, we had repo madness when the market was starved for liquidity and the bond market panicked overnight. Interest rates spiked to 10% out of nowhere. And very quietly, the Fed started pumping money into the system again, started quantitative tightening. And that was at 50 billion a month. And we're about to go to 95 billion a month, almost double the historical high. It has never been done before, not even close. And there is no telling what's going to happen. There just isn't. All right. I don't want to. I don't want to like overtly doom and gloom you to death, right? Because nobody knows. Nobody knows. Personally, I don't think it'll be good. But we're going to look in the charts. The last time we started the last time we had one of these milestones in quantitative tightening, the chart ended up doing the opposite of what I would have guessed would happen. And now we're getting right back into that there. So, anyways, look, folks, it's going to be an interesting week next week. Let's put it that way. An interesting week. And before we get too far into this, I have to send a big thank you to Mr. Mike Bender from Robin RC Models. Thank you, Mike, for the super chat. Appreciate the support of the channel as always, sir. And Mike says, "Hi, Jack. Question: do money printers work without electricity?" Asking for a friend. 1 million melon points to the man from Germany for his lighthearted humor. Congratulations for that, sir. That was funny. I got a kick out of that. And the fact that we can still laugh about it, it says a lot about you because what you guys are facing this winter, well, if you can't laugh about it, what can you do? Cry yourself to sleep and hope you don't freeze to death while you're sleeping because power going out in winter, it sucks. It really sucks. And I'd be really surprised if there weren't rolling blackouts in Germany or in Europe as a whole coming through this winter. And we're just not lucky enough. It'd be nice if the power goes out and hey, the money printers don't work. Something tells me the ECB has backup generators, and I don't think those backup generators run on unicorns and rainbows and good intentions. No, I'm pretty sure they run on good old fashioned fossil fuels. While they're telling you need to use less, they help themselves. So you can tell your friend, Mike, you can tell your friend that no, I don't think those money printers are going to go dark just because everybody else does. I'm sure the last little bits of power on that continent will be used to make sure they can flood the market with just a few billion more euros. But don't worry, Christine Lagarde assures us, assures us that inflation will come down in time. She can't tell us how. She can't tell us why. She just makes that stupid, placating, patronizing smile. It will come down in due time. Don't worry, it'll come down. Oh boy. Anyways, thanks again, Mike. I appreciate the super chat, sir. I appreciate the support of the channel. And it's about that time. Why don't we take a look through the indexes and see what we have going on in the world right now? We're going to say hi to my man Mish. How we doing today, Mish?
I'm doing good. How we doing, Jack?
I am doing just great. And has anybody got their hands on a shiny Merc dime yet? Has anybody caught up with you in the wild?
No one has caught me in the wild. I'm currently in Gilroy, California, and it's
Gilroy,
if you can find me in the wild, you get a free Merc dime. I would like to point out to Princess Consuela that yes, the SPR does sound like a bankruptcy sale.
It does sound like a bankruptcy. So, what was it? The name of the town, Gilroy? Was that it?
Yeah.
How are the Gilroyans? The Gilroynians? What do you call the good folks of Gilroy?
Well, apparently this is the national headquarters for garlic, where I'm at, and eggs Benedict.
Garlic and eggs Benedict. Okay. Note to you young fellas out there: do not take your first date to Gilroy. You must avoid garlic on a first date, gentlemen. Please, always avoid
And raw
garlic.
onion. Garlic and raw onion.
Yeah. Stay out of Gilroy. No offense to the good people of Gilroy. I bet it's a great place to go on your third date or your fourth date. I don't want the Gilroy Chamber of Commerce coming after me because tourism is down. But anyways, here let's say hi to Cheeseburger real quick before we go through the indexes. Howdy, Cheeseburger. It's good to see you back here. He says, "How long until we see full-on riots in Europe?" Well, we've had full-on riots in Europe for years now, haven't we? We had the yellow vest thing. What was that in 2019? Was when the yellow vest really hit its stride.
Yep.
And then it got a little quiet in 2020. But there was a lot of protests in France last year. And then, my God, the thing that's going on in the Netherlands. We'll talk about that in a couple of minutes. What's happening with the Dutch farmers? Um, spraying horse manure at the home of the prime minister. One could argue that's riotous. Sounds like a party to me. Of course, I tend to be on the libertarian side of things. So, spraying cow poop at a politician. Yeah, hey.
As long as they bought it at a good price from the farmer, being a libertarian, I'm okay with that.
Hey, you know what? I bet the prime minister's house is going to have a great lawn next year too. So really, he should be thanking those farmers. Fertilizer's it's not cheap, man. Saved them a lot of money. It's better than True Green. Need to bring that riot to my house. My grass looks terrible. We haven't had any rain in a while out here in Pennsylvania. Anyways, Cheeseburger, full-on riots in Europe. I wouldn't be surprised to see it this winter. I would not. When people are told that their power needs to go out, and yet certain Bond villains that reside in Davos, Switzerland, are still living the sweet life of decadence while everybody else is cold. Something tells me that people in Europe are not going to take that sitting down. So I don't think all that long. If I had to guess, I'd say December to February, but that's going to depend on Mother Nature more so than the European Central Bank, more
I'm
so
going
than
to
any
take the first.
policy.
I'm going to take the first mark of the day here, and because requited Sugal, and no, I did not pronounce that right. They'll just keep warm by rioting.
Okay. And what was the word? Requited?
No. Yeah, I don't know I can't pronounce his name.
Oh, okay. Yeah, rioting. It does sound like a calorie burning exercise. It's a good way to get the metabolism up. I'm sure there's like a cardiovascular element to it, so it's a great way to stay in shape while you're keeping warm. I'm just looking for the bright side of life here, folks. You know me; I'm known for my optimism over on this channel. Anyways, thank you very much, Cheeseburger. Good to see you, brother. Thank you for the support of the channel as always. And how are things in New Zealand, by the way? Um, Man, things were with the cerveza sickness. Things in New Zealand were getting beyond ridiculous for a while there. That female Skeletor-looking politician that runs things over there, what a wacko she was. And well, I'm just wondering what's going on with the energy prices in New Zealand. You guys don't get the cold winter, I'm sure that Europe is getting, so you're lucky in that regard.
Well,
Anyways,
hold on. The southern hemisphere is having a remarkably cold winter right now. So tell our Australian friends, tell us if we're wrong, but I think you're down there having a cold snap in Australia and in South Africa.
I mean, seriously though? What's a cold snap in Australia? It's like a goosebump on your arm.
65 degrees. 65
Yeah,
degrees.
my heart weeps for you. Seriously, talk to me when it's -10. I live on top of a ridge where I'm at. It gets so breezy in here that I swear it's like the big bad wolf is outside my house. Anyways, thanks again, Cheeseburger. I appreciate the support of the channel, sir, as always. And let's take our look through the indexes. It is 327 now. We got about 33 minutes of trading left in the week. The S&P is currently at 4,073. And you know what? I can't see the daily change on this stupid chart. I should have realized that when I set this up. All right, down or up 65 points on the day, or 1.72%. I'm going to have to do the same thing here on the Dow, up 421. Heck of a day for the Dow, up 1.33%. Best day they've had in a while. Although, are we still down for the week? No, we are up for the week. All right, the Dow's doing all right for the week. And let's see what we have got in the Nasdaq, aka the red-headed step index. They are up 265. Heck of a day for the Nasdaq, 2.2%. Looking at a 1 week chart, a really good week for the Nasdaq. I'm going to look at that chart a little later because we had that head and shoulders pattern that we were looking at. And, well, we bounced off the target low of that. And it looks like we might be retesting the neckline there. Oh, heck, let's talk about that real quick while we're here. Oh, I don't have that chart up. Shame on me. I am remiss.
Well, why are you
Today.
doing?
No, I
why
got
are
it
you doing-
quickly. It's on speed dial.
I was
There
gonna
we
say,
go.
Your dad just said something about Mark Moss.
My dad said something about Mark Moss?
Yeah.
All right. What's up, Dad? It's good to see you. Mark Moss theory is that the Fed goal is to save the dollar and has nothing to do with reining in inflation or controlling unemployment. Uh, I would agree. The Fed, if considering, by the way, hi, Dad. Considering what the Fed or what the government has done to defend the dollar overseas and in foreign policy. I mean, you could argue wars have been fought over the dollar supremacy as the world reserve currency. It's not such a stretch of imagination. I mean, if you're talking, we'll start a war. Would we put a few people out of work to save the reserve currency status of the dollar? Absolutely. I'm not sure they're two different things. I'm not sure saving the dollar and fighting inflation are mutually exclusive. I think they're kind of one and the same. Now, is the reason why the Fed wants to save the dollar? Does it have more to do with price stability here in the States, or does it have more to do with the U.S. geopolitical dominance around the world? That's an interesting theory, and off the top of my head, I'd say the latter probably has more to do with geopolitical dominance. But I think they're pretty much one and the same. Um, Now, as far as controlling unemployment, no, I don't think the Fed cares about that. To be honest with you, because they're out there saying they want higher unemployment right now. I don't know why, but that's what they're saying. But I got to go check out Mark Moss's channel and see if he adds a little more color on that theory. All right, back on the Nasdaq real quick. A couple of weeks ago, we drew this head and shoulders pattern, and we had the neckline. And a head and shoulders pattern is a very bearish signal, and typically it signals a move basically equal to the gap between the neckline and the top of the head, which would take us down to this level that we broke just below not too long ago. And we've had a couple of good days in a row now up from there. And it looks like the market is headed back to retest this. Well, I gotta refresh this one. Am I looking at the right chart here? Why is the Nasdaq saying 12.5 on this one, and we're saying 12.1 here? Something is up with my charts. Disregard my investing.com charts. I think I brought up the wrong index there. Sorry about that, folks. But if I had to look on this chart, I would say the target is probably somewhere around 12,350, i.e., retesting the neckline from that prior move. And I think we may get there next week on the lower than expected CPI report. Although, if everybody's expecting a low CPI and we get a low CPI, can you really say it's lower than expected? I don't know. So we'll keep an eye on that one. And I got a couple of super chats I have to get to here. Hello, everybody. Where are we? Okay, we already got that one. We already got
And
that
Nasdaq
one.
just went way up. That was kind of weird. But go ahead. No, they're just putting in temperatures and how much it really sucks. It's like -5 degrees Celsius in
Oh wow, yeah,
Australia.
he's in. Cheeseburger says he's near the Southern Alps. The coldest it got so far this winter was -4. That's cold enough for me. Take a look at the Three Waters proposal over here. Government killing our farmers too. I'm not familiar with the Three Waters proposal, Cheese. I have to check that one out. Did you just inspire another video? Cheeseburger, remember, folks, was the inspiration behind the MMMRI video when he asked me to look into Manorino's indicator. And, well, thank you for that, Cheeseburger, because that was a pretty important day for my channel. So I got to take a look at what the Three Waters proposal is. That's interesting. I've never heard of that one, but thank you very much for the super chat, sir. As always, I appreciate it. And I have got Mr. David Montaquilla. Did I say it right? Montaquilla. He says best channel on the tube. Outstanding. I'll take it. I don't know. My ego tends to occupy more space than my melon allows, but best channel on the tube, I can think of some pretty good ones out there. But I don't know if I'm the best channel on the tube, then there has to be a reason why Financial Prepper just passed me again in subscriber count. I don't know, Mish. He passed me again. I hate looking at Chris's taillights, man. No offense, Chris. You got a great set of taillights, brother, but I hate looking at them. I'm coming for you. Check out Financial Prepper while you're at it. By the way, folks, that is a great channel. Chris is an awesome guy. He's been on the channel a couple times. We were just talking a couple days ago about what was the book? Kiyosaki's book, Rich Dad Poor Dad. We were just talking about that one, and I read that because Chris recommended it, and did not regret the decision. It was a good book. Anyways, thank you, David. I appreciate the kind words, sir, and the support of the channel very much. Best channel on the tube. I'll take it. I'll take it. All right. Now, I promised you guys. What's up, Mitch?
I'm calling at least 10% of that.
You're calling at least 10%. Oh, you mean it? They just they come for the melon, but they stay for the mish. Is that what you're saying?
Yeah, dips.
There he goes. All right. All right. Let's talk about the elephant in the room. All right, and that is this chart that I just messed up. Here we go. The Federal Reserve's balance sheet. All right, because next week, the pace of quantitative tightening, we started 3 months ago at $47.5 billion a month. That was $30 billion a month in Treasury securities and $17.5 billion a month in mortgage-backed securities. We're going to be rolled off the balance sheet. Now, rolled off the balance sheet, it's, I guess, technically selling, but it's not really a selling because these assets are always maturing and getting repaid. And what the Fed normally does is they take the repayment and they just buy the equivalent product in the open market. So there's no net change to liquidity in the markets. All right. One matures, they get paid back, they buy a new one, no difference. But what they've been doing is as they've been maturing, they've been taking that money and they've just been just deleting it. Quantitative tightening, it is money destruction. It's the opposite of money printing. It's the opposite of QE. And if Stephen Van Meter is out there trying to say why QE is not money printing, I'm sorry, Stephen. I get what you're saying, that they create bank reserves and it's technically different, but you know what? It all ends up in the same place. QE is money printing. There, I said it.
If someone tells me money, I think M1. If it ends up in M1, it's printing money. I don't care how it got there.
It's money printing. It's honestly like if QE isn't money printing and it doesn't cause inflation, then what the heck are we living through right now? Obviously this was the effect of money printing and inflation. Anyway, I got sidetracked there.
Well, no, it's high theory economics. I got what he's trying to say, but for the most people, and me included, it's printing money.
Yeah, and Steven is a really sharp guy. He is really smart. I love his channel. I watch almost everything he puts out. And sometimes guys with an intellect like his, and this is a compliment, Steven, I promise. This is a compliment. But sometimes when you're that smart, you have trouble getting out of your own way and just like stop being so dang complex and convoluted. Like, keep it simple. Keep it simple, genius. That's all. I'll say it. All right. So back on this. So the Fed is supposed to be rolling off these assets or quantitative tightening, right? When this chart goes up, that's quantitative easing. When you see the chart going up slower, it starts to level off. That was the taper we talked a lot about in the fall. And then when this chart starts going down, that's QT or quantitative tightening. Now, if we zoom in a little bit on these last couple of months, last couple of weeks, there are a couple of people, I'll stop short of calling them trolls, although their comments are troll esque. There's been a lot of people who, with a rather bellicose tone, have been telling me I'm crazy or I'm drinking the Kool Aid, that no, the Fed isn't tightening. You're so crazy. There's no tightening going on. Well, this chart is going down. That's tightening. That is the money being destroyed, right? That it's not going down as fast. It goes down, it comes up, it goes down, it comes up, but the trend is clearly down. All right. So, yes, the Fed is tightening. The numbers don't lie. All right. Now, could there be?
Are you going to talk? Are you going to talk about the masking here?
Yes. Yeah, we are going to talk about the masking. Now, there could be some off balance sheet activity, some nefarious plot going on, the plunge protection team, whatever. That's all entirely possible. All right. But from the sake of the fact of this balance sheet, the Fed is tightening. All right. They are destroying money. We peaked at about, what was it, 8.965, just under 9 trillion. And now we're sitting at 8.82. Now, this is not as much, right? We had 3 months of $47.5 billion in tightening rolling off the balance sheet. So we should be lower than we are right now. Now, one of the reasons why we're not as low as we should be is something called TIPS, or Treasury Inflation Protect Securities. And what TIPS are is they are basically Treasury bonds, but they're protected against inflation. If inflation goes up, these bonds go up in value along with it. Now, the Federal Reserve has TIPS on their balance sheet, these inflation protected bonds. So even though they've been rolling off their balance sheet and, slowly technically selling these assets, their tips have been going up in value as inflation has gotten worse. So the fact that the tips that are on their balance sheet have been going up in value has partially offset the selling of their other assets. And that's one possible explanation for why this chart is not dropping as fast. This was in Bloomberg today. Accruals on inflation protected treasuries count towards the total. And if you include them, then holdings fell less than the allocated 90 billion or the allotted 90 billion. All right. So that's a lot of people have been saying. I get a lot of comments on channel. Some are trolls, some are actually very well informed, thought out comments, and they're presented very reasonably. So no problem with that. It's the guys who get nasty in their wording. No reason for that, guys. You're not winning any points for being an a-hole on YouTube. Trust me. Doesn't get you anywhere in life. But a lot of people have pointed out that the balance sheet should be going down lower faster than it is. Well, that's one possible explanation. All right. So next week, the Fed goes from 47.5 billion. They're going to double it to 95 billion. They're going to be doing what was it, 60 billion a month in treasuries and 35 billion a month in mortgage-backed securities. All right. So that is going.
Yeah, but that mortgage-backed security thing, there's no one to buy them.
Yeah. And that's kind of leading to this story, Mish, that just came out yesterday. This is in Business Insider India, but I saw this story in a couple of times. Bank of America is warning of rapidly vanishing liquidity in the bond market. All right, now liquidity in the bond market. We're getting a little Fed speak here, right? When a market is liquid, it means there's plenty of buyers and there's plenty of sellers. Right? Think of a pool. Right? You got guys putting water in, you got guys taking water out. Right? But the pool is full of water. So minor fluctuations in the in and out doesn't really change the level in the pool all that much. It doesn't become a problem until the pool gets low or the pool starts to overflow. Right now, we have liquidity problems. And historically, the biggest buyer in this pool of US government debt has been the Federal Reserve. They had almost 9 trillion of it. They bought tons and tons of this stuff. Well, the Fed has not been buying. The Fed has actually been a net seller, right? They're not actually selling, they're just letting it mature. But when they let those bonds mature and they destroy the money, it's kind of like they're drinking water from the pool. It's draining liquidity, all right? And the government keeps creating more bonds, the government keeps borrowing more money. That also drains liquidity from the pool. When the government borrows the money, that's taking money out of the bond market and putting more bonds in. Well, there's more bonds, there's more sellers than there are buyers. All right. So that means the price is going down. When the price goes down, the yield goes up. And we're seeing that in the interest rates. This is the 10-year treasury right now. And, we've been looking at this chart pretty much all year. Look, since the start of the year, how rates have just gone up. I mean, now we had this big spike and then we had the sell off here. And now we're heading higher again. We're heading higher a lot faster. And I just want to point out this one on the chart here because this is something else I showed on my Patreon stream on Wednesday. This high, this previous high in the 10-year treasury yield was on June 14th. All right. That was one day before we started that 47.5 billion in quantitative tightening. Right. Up until this point, there was no tightening, there was no easing, right? We had tapered and everything. And then right here at the peak in interest rates, when QT begins, all of a sudden we had that sell off. And that was when the bear market rally started, right? It was like everybody was so afraid that QT was going to ruin the world. And I guess the short trade got so overcrowded, myself among it, and it all just sold off. So the reason I point that out is here we are now. We've come full circle. We dipped down almost in a perfect V shape, and we're a week away, and we're almost right back where we were right before we started QT. And it looks like we're on pace to get there right as we double QT. Now, again, anybody who tells you they know what's about to happen is full of it because we've never been here. We've never been at a point where so much money was being sucked out of the bond market. And the bond market, folks, that steers everything, all right? Commodities, real estate, stocks, it's all everything. It's all drawn back to the bond market. That's where the bond market informs everything. It's freaking huge, all right? It's the price of money. And it looks like we're setting up one possible outcome, I'll say here, because I can't tell you I know what's going to happen. I don't know what's going to happen. Nobody does. But this looks like it might be setting up for a double top pattern, a double top reversal, right? When you hit a level and you fail, you go down, you come back up, you hit that level again. If we do the same thing we did on June 15th, where the trade just gets too crowded and it reverses, well, that would be a double top pattern. That would be an incredibly bearish signal for treasury yields. That would suggest yields are going lower and they're going to keep going lower if that pattern plays out.
So what happens if the pattern doesn't come down and keep going straight up? What are we looking at? Do we know yet?
So if we don't, no, I can't tell you where we stop. But if we break above that level and we keep going, which the Fed has signaled they're going to do, that just tells me when it finally does pop, it's going to pop even worse. Because now, that was a good segue, Mish, because now that we got to set this to our 1 month candle and we got to zoom way out. You guys remember this chart? The chart of the 10-year treasury, and every time we got above this line, something broke. We're already well above this line. We're already in a space where something will break eventually. And the Fed is saying, we're going to keep raising. We're going to keep tightening. We're going to keep tightening. They're going to double the pace of tightening. They're going to keep hiking rates. If we keep going higher and higher, it just means the fall from here is going to be that much more spectacular. And by fall, I don't mean, hey, maybe rates never go down again. That's possible. All right. I mean, that it is possible that we have learned our lesson. Stranger things have happened, that we've learned our lesson from 50 years of easy money, and that it's going to get so bad, but we're not just going to turn the money printers back on, and we're not just going to lower rates again, that we're actually going to start being responsible and we're going to have a reasonable monetary and fiscal policy. It could happen. I'm just throwing it out there. It is a possibility.
It
If
is a
that's the case,
possibility.
rates will never go down again. I mean, they might tick down a little bit, but they'll never go back down to near zero where they were, because that is not a natural place for the price of money to be. All right. I can't tell you off the top of my head where the natural interest rate should be. It's a whole heck of a lot higher than it is right now. I can tell you that. All right. So the problem is, if we get there to that point where interest rates go to where they naturally should be, the government is insolvent and the government defaults on their debt and all hell breaks loose. That's not really a good, it's definitely not a good thing, right? It's not a good outcome. Maybe in the long term, it'll be a good outcome, but that's the kind of stuff that takes up a whole lot of pages in the history books when something like
Oh
that
yeah.
happens.
I kind
So,
of feel like we're writing history books right now anyway.
oh yeah, absolutely. I mean, it's what I don't know is it 1922 or is it 1928 in the history books? And when I say
I
1922,
think
I'm referring to Weimar Germany.
yep.
1928, America, the Great Depression.
Here's
I
what's
can't tell you
worse.
which way we're going.
I think we're in 1920 in Germany. I think we're in 1928 here, and I think we're in the 70s in Saudi.
Interesting. Well, those are three wonderful economic scenarios rolled up into one. I'm gonna go cry myself to sleep tonight. But so look, the reason why I'm saying this and I'm drawing this drawing up this. Let me go back to the 1 day chart here. This double top pattern here is, folks. This, we've never had this happen. I just can't tell you that the numbers are too big. The equation is too complex. I can't tell you what's going to happen when we reach this point. 95 billion a month. All right, maybe nothing happens. Um, but look at this story here. Let me just read you a little bit. Declining liquidity in the U.S. Treasury market represents the biggest systemic risk to financial markets, according to Bank of America. The risk of falling liquidity and resiliency of U.S. Treasuries could be bigger than the 2007 housing bubble, B of A said. While this sounds like a bad sci fi movie, it is unfortunately a real threat. People are freaked out by this. I mean, some of these guys on FinTwit, they've been screaming, they've been cussing. I mean, these are guys who are normally very calm, very quiet, and very methodic. I mean, they've been banging the drums saying something very bad could happen here. I mean, liquidity in the bond market is a big freaking deal. And the typical response when we have liquidity problems in the bond market, the typical response has been the Federal Reserve either starts printing money to inject liquidity or they start lowering interest rates. Well, they can't do that now because we have this inflation problem. If they do that, inflation runs away. And that's why I'm saying I don't know if it's 1922 Germany or 1928 US. I just don't know. But we have both problems now. With both problems, we have disappearing liquidity and we have high inflation. This could be the mother of all stagflationary events that's about to happen. So that's why I was saying on Wednesday in my Patreon call, I just don't know. I just don't know what happens here. Nobody knows. This has never happened before. Anybody who tells you they know, they're full of it. That's all. Meanwhile, we've got this guy today. Thanks, Mish, for sending me this one. He says Fed's Waller need aggressive rate hikes now while the economy can take it. A lot of folks would tell you the economy can't take it. I personally think the economy can't take it. I think they need to anyway. In the long run, they're going to have to. But if the Federal Reserve is able to keep the unemployment rate below 5%, it can be aggressive on bringing down inflation. But after that, trade-offs will appear, said Fed Governor Christopher Waller on Friday. 5%, that's what, 1.5%? That's a lot of people out of work from here. So the Fed governor is saying, yeah, I think we can keep doing this until at least a few million people lose their jobs. Well, that's very nice of him. I'm sure those few million people are very comforted by that. Says if the unemployment were to stay under 5%, I think we could be really aggressive on inflation. Once it gets over 5%, there are going to be obvious pressures to start making trade-offs. The problem is inflation won't just, or not inflation, unemployment, it won't just go just above 5%. All right. Once unemployment gets going, it snowballs and it starts going on its own. You can't just say, oh, 5%, we're going to stop and unemployment stops going up. No. Once you get to 5%, it takes off. Next thing you know, it's 10%. That's what happened in 2007, 2008, Ben Bernanke. So they're understand these guys are saying, yeah, we can afford to be really aggressive. When he says we can afford it, he's talking about we'll put a few million people out of work. That's a sacrifice they're willing to make. Nice of them, isn't it? But unfortunately, this is the corner that they have painted themselves into. It took them 50 years to do it. 50 years of low interest rates and quantitative easing, but that's what happened. And over in Europe, they're not much better, folks. Over in Europe, check this one out. Lagarde, Christine Lagarde, otherwise known as the convicted felon in charge of the European Central Bank, says can't offer liquidity to energy firms. Central banks already turned down an aid request in April. Germany's VNG is the second firm requesting government support. Now, that sounds all good and well, but here's what they're saying. The European Central Bank President Christine Lagarde ruled out providing short-term financing lines to struggling energy firms, saying that's the job of European Union governments. Well, where do European Union governments get their money from? They get it from Christine Lagarde and the European Central Bank. So all she's saying here is we're not going to bail out the energy firms directly. We're going to make the governments bail out the energy firms, and then we'll bail out the governments. That's what she's saying. So this is her trying to sound tough on inflation, trying to sound responsible, but she's arguably the worst central banker in the history of central banking. And I don't
So,
think.
do you remember the discussion that they had when remember the commodity bankers about 3-4 months ago went to the ECB and said, "We need money,"
Yep.
and they said, "There's no way for us to give you money."
Yeah.
I think this was the outcome.
Yes. And then Uniper went bankrupt, right? And now VNG is saying they're bankrupt, and there's utilities in Sweden, utilities in the UK. They're all failing. Well, the governments are bailing them out. Well, the governments are going to get, when the governments and the banks need bailouts, they're going to get it from the ECB. So the ECB is just saying we're not going to skip a level to bail out the utilities. We're going to make the banks do it. We're going to make the governments do it, and then we'll bail them out indirectly. It's the same net effect, right? It just means more companies will go bankrupt before the bailouts start. That's all, and it probably means a lot of these bigger, maybe better capitalized utility companies are going to have a chance to gobble up market share as their smaller competitors fail before the bailouts start coming in. Also, the ECB yesterday, they just raised interest rates by 75 basis points. Yeah, they raised their interest rate from nothing to 0.75%, even though inflation in the Eurozone is over 10%. Way to fight inflation. Geez, guys, don't put yourselves out there too much. Remember, Christine Lagarde was on TV saying, oh, it's all right. Inflation will come down in due time. It will come down. She couldn't say why. She couldn't say how. Oh, it'll just come down in due time. That smug smile on her face. Anyways, there's my man Cheeseburger again. Thank you, Cheeseburger. Mr. Matt, he says, if you think the economy can take it, I've got a bridge to sell you. It's the one you'll be sleeping under. Troll reference. Very good.
Very nice. Very nice.
Very, very good. Yep. Well, hey, I'm looking for places to park cash. I'll entertain an offer for a bridge. Throw me a number, Cheese. What are you selling your bridge for? I'll take an ownership stake in Cheeseburger's bridge. Probably better than buying stocks
You're
in
buying the
European
third
banks.
pylon from the left.
What was that, Mish?
You're buying the third pylon from the left.
Third pylon from the left. Do I get to put my name on it?
Yeah, spray paint though.
Thank you very much, Cheeseburger. I appreciate the support of the channel, sir, very much. All right. Now, we were talking about the ECB and everything. This is another one that Mish found today. Kudos to
Cheeseburger
Mish.
says 250.
250?
350.
Yeah, you're breaking my balls here, Cheeseburger. Come on, man. I'm gonna lowball you here. 250. You can't go any higher than 150. I don't even know what we're talking about, what units we're talking in. I'm just lowballing you. All right, ArcelorMittal, and I'm sure I mispronounced that. In Poland, they're to temporarily suspend BF number 3 at something I'm not even going to try to pronounce plant amid lower demand. ArcelorMittal, a subsidiary of global steel producer ArcelorMittal, has announced that it has decided to reduce production amid the slowdown of economic activity in Europe, the decrease in demand, increasing levels of imports from outside the EU, and increasing natural gas and electricity prices. Now, I was very surprised at this first paragraph. This is a major steel producer in Poland saying they're shutting down a steel mill. Now, understand, when you shut down a steel mill, that's a big deal. You don't just turn them off and then turn them back on. These things are full of molten steel. Funny thing about that, when you turn the heat off, it tends to solidify, and then it doesn't just melt right back over like it's Big problems when you do that. All right. It costs a lot of money to turn these off. It costs a lot of money to turn them back on. So this is a big freaking deal. But when they
So
listed the reasons,
without going crazy engineer on them, heat stress over a large group of metal has to be done slowly. So if you cool it down slowly, and it takes like 6 days to heat it up. You heat it up slowly, and it takes 6 days. So you're looking at a good 2 week turnaround to get this thing back up. This isn't turnkey.
yeah, and if you want a slightly more entertaining explanation of why, go watch the end of Alien 3. That was awesome. Uh, I'll just leave that one out there. Make sure the kids aren't around. That movie's bloody. Anyway, um, but they mention a couple of things here. Economic activity in Europe, decrease in demand for steel. That's interesting. A decrease in demand in steel. Are they talking about Europe or are they talking about China there? Because when I hear a decrease in demand for steel, I immediately go to China and the slowdown on building there. So that jumped out at me. Increasing level of imports from outside the EU. That tells me that's perhaps Chinese steel being made over there, making its way into the European markets because there's no demand for it in China. And then they finally mentioned increasing natural gas and electricity prices in the last paragraph. But I found it interesting that they mentioned all these other things about demand issues with steel before they got to the energy prices. I wonder if there's something more systemic going on. Anyways, I saw an article this week that talked about the de-industrialization of Europe. And that is a very serious word, de-industrialization, right? I mean, think about the industrial revolution in the US. That's when we went from mostly like sustenance farmers to largely manufacturing factory workers. That's when the cities were built in the US, right? That was the end of the pioneer age and the start of the transcontinental railroads and the growth of major cities, the US as an economic powerhouse. They're talking about that in reverse for Europe. That's how serious this energy crisis is. The leaders in Europe, I've been saying it all week. I did a lot of videos about this. They better get their heads out of their posterior nether regions. They better do that fast. Deindustrialization, that is a powerful word. People need to like seriously spend some time on that word. When you see it in print, you see, economics experts talking about deindustrialization, think long and hard about what that means for the quality of life of the average European. That is a big freaking deal right there. And people are just being way too flippant about it. Oh, we'll just build another solar panel. Everything's going to be fine. Okay. All right. You're willing to bet the suffering of hundreds of millions of people that your solar panel is going to be there in time to save everybody. It's not. It's not. Anyways, I have to send another shout out to my good friend Gordon Nash. Thank you, Gordon. Nothing to say, Gordon, but very generous of you anyway. Thank you very much. I appreciate that. You guys are awesome. I have the best viewers on the tube.
So
Who was it,
this
David?
thing, which we talked about, is being built, the charging network. We don't even have the silver to start or to finish that yet.
Ooh. See, this is how Mish cues me up. He tees me up so perfectly when he talks about we don't have the silver. That's great. I love that. Well done, Mish. See, folks, you don't realize how much Mish steers the show and how much he gets me off my soapbox and back on track. That was very well done. And you're right. These charging networks, they're not going to be built next week. They're not going to be built next year. We'll be lucky to have them in 30 years. And by the way, charging networks for what? Somebody on the channel in a comment, they referred to them as external combustion engines. That was brilliant. I can't remember who said that originally. I would love to provide proper citation and give you credit for it. But that's what they are. You're not saving anything. They're coal and gas powered cars. It's just you have to plug them in and to the wall first. That's all. You're still putting carbon in the atmosphere. It doesn't accomplish anything.
So solar generators. I've been looking at solar generators. We talk about prepping sometime, and a solar generator is a great way to have a battery backup with an inverter built in, right? If you spend all day charging your solar generator, I'm talking about the middle of the run generator, you can get 4 hours of 2 box fans off of it.
Yep.
That's charging all day with 2 PV 120 solar panels.
Yep. It doesn't work that way. It's just
Yeah.
physics. Physics exists. Physics is a thing. Good intentions doesn't trump physics. Sorry, it just doesn't work that way. But hey, thanks a lot, Gordon Nash. I appreciate the super very much. And Mish, you did tee me up pretty good there when you talked about silver, because boy, this story is sitting out there, and It's not doing a whole heck of a lot yet. But man, this is big. This is really big. It's happening slowly, but this pace is picking up, and this has been going on for almost 2 years now. And this is on Wall Street Silver on Reddit. Shout out to my man Jim Lewis from Wall Street Silver. Love your channel, brother. Thank you for the inspiration to start this channel. That came from Wall Street Silver. But this is a post by a user named Ditch the Deep State on Wall Street Silver. And, Wall Street Silver gets a bad rap on CNBC and some of the establishment media. The way they've portrayed the Wall Street Silver movement, they made us sound like a bunch of dropouts living in mom's basement or things like, it's almost like they got off on making us look stupid and making us look amateurish. But you look at the DD that this guy Ditch the Deep State has been doing for the better part of 2 years. I tell you, this guy is sharp. He is really good. And by the way, Ditch, open invite. If you ever want to come on this channel, dude, I will make time for you any day you want to come and talk about your work because this stuff is fantastic. I know we got a lot of Wall Street Silver people watching this channel. That's where my channel came from. But check this out. I'm gonna skip over the gold part here. I'm gonna focus on silver, but this is happening in gold also. Registered silver is now down 69% since the start of the squeeze to 46.3 million ounces. He's talking about the registered silver. That's basically the liquidity of the silver market on the COMEX, which is the market for silver in the US. It is down 69% since the start of the silver squeeze. The current vault level is enough silver for 9,254 contracts. Each silver contract is worth 5,000 ounces of silver. If you buy one COMEX contract, you get 5 of those big 1,000-ounce bars. How does that compare with prior single-month deliveries? The recent March of 2022 contract had deliveries of 10,577 contracts. So the amount of silver sitting in the registered category on the COMEX right now is not even enough to supply the amount of silver that was bought in the last active month contract in March. COMEX is almost drained, folks. I mean, this registered category, that's the metal for sale. And at current prices, that's it. If or when that occurs again, COMEX warehouses would be 6.6 million ounces too skinny to accommodate that. And skinny means naked short. And here's the numbers. And this is, I love Ditch the Deep State's work over at Wall Street Silver. He provides these charts. You've got two main categories, registered and eligible. All right. I want to real quick explain the difference. Registered, that is metal for sale. And then eligible, that is metal that somebody owns, but it's stored in COMEX vaults. All right. And somebody else owns it, like the SLV Trust, right? The iShares Silver Trust, which I hate the SLV. Don't even get me started on that. That is held in COMEX silver vaults. Wealthy people, right? People who own millions of ounces of silver, they don't keep it in their house. They keep it in COMEX vaults. It's theirs, but COMEX protects it for them, all right? That's in the eligible category. Now, sometimes eligible silver can move over into registered and go up for sale, usually because you need prices to go up for that to happen. The reason I say that is because silver prices are so low right now. What are we, 18 bucks and change right now? Well, at the start of the silver squeeze, there was 149
middle 18s.
Mid 18s. At the start of the silver squeeze, there was 149.5 million ounces of silver in the registered category, in the for sale category. Well, on Thursday, 1.1 million were drained out, and right now we're down to 46.27 million ounces from 149.5 million in January of 2021. It's almost empty, folks. 2/3 of the silver in the market is gone, and the price has only gone down since then. Explain that to me. Now, look, there's still a whole lot of silver in the eligible category, 277.9 million, right? That's more than at the start. But what that means is that these prices, everybody has taken their silver off the market, right? People are saying, oh, it's only 18 and a half. Nope, not selling at that level. I want my silver taken out of registered and put back into eligible. And I'm not going to send it back to registered until I get a better price. So two things are going to happen here because this is dropping right now at a rate of a couple of million a week. I mean, I remember it was earlier this year. It just went below 100 million. And I was saying something's going to happen when it goes below 100 million. Well, it didn't. So something's going to happen. If this pace continues, either a huge amount of silver is going to magically appear in the registered category, which has happened before. It's very possible you get a big paper dump. or the price is going to rise significantly. One of those two things has to happen. Now, there's a lot of people are saying what's going on right now is there is a mass migration of metal from west to east. Central banks in Russia, central banks in China are buying metal while our banks are selling them. So keep your eye on this story, folks, because silver prices right now they're very low. I think they're going lower. If the market goes into one of these Armageddon-like sell-offs, prices are going to go even lower. But somebody out there is buying this metal up at these prices. Somebody is scooping up, slurping up every ounce of metal imaginable right now, and they're doing it without sending the price higher. That can't go on forever. Something has got to give here. Mish, you really teed that one up nice, man. That was well done.
It's
Did I
almost
miss
like
you?
I know what I'm doing.
Yeah, almost like you know what you're doing. Hey, I got my man Mike Binder is back in the super chats. Thank you, Mike. He says we get a lower CPI, but still a 75 basis point hike next week. I agree with both of those. A week ago, I would have told you 50 basis points, but it's looking like 75.
So I'm ready to go on. I'm ready to go live with my prediction on CPI next week.
Go ahead. Let's hear it, Mish.
We're gonna do a 7.9 minus 0.3.
Minus 0.3 being the month over month number,
Yes,
and 7.9 being the year over year number.
and that will be the last downward trend we'll see in a while. I think maybe
What were
October.
we?
I don't think October is going to go down.
We were 8.5 last month. Is that what it was
We
again?
were. Yep.
I got to look at the data before I give a chart. I haven't looked close enough at the data. Maybe I'll do a preview video over the weekend. I don't know. Let me know in the comments if you want me to do my CPI preview video again. I haven't done it for the last 2 months because there's so much work goes into those videos. Like a 15-minute CPI preview video takes like 6 hours to do, folks. There's really a lot of work goes into those. You don't know half of it, trust me. Anyways, let me finish the rest of Mike's comment here. He says after SPX 4150 or so, people will remember what the Dixie means for earnings Q3 overseas. Okay. I got to bring an SPX chart up here so I make sure we're looking at the same thing. Let me get the actual S&P 500. I don't know what happened. I got this weird number. Okay. SPX 4150. That's a pretty bold call, 100 points up from here, but I could see it, especially on a lower CPI print. I could see us going to 4150, Mike. Where would that? That's right around this prior resistance level here. Okay. I see your 4150 level. I do not disagree. We could get there on a good CPI print. People will remember what the Dixie means for Q3 earnings overseas. Okay, so that one we need to add a little color to, but I agree with that also, Mike. So aces all around on your comment. So what Mike is saying here with people will remember what the Dixie means for Q3 earnings. Dixie, that is the dollar index, the strength of the dollar measured against other global currencies, namely the euro, the Japanese yen, the British pound, and the Canadian loonie. They're the major inputs to the Dixie's calculation. So when the Dixie goes up, that is the strength of the dollar relative to other currencies, not relative to stuff, but that's the strength of the dollar relative to other currencies going up. Let me just show you the Dixie real quick. We'll bring that one up. And the Dixie has had one heck of a year, folks. Look at what the Dixie has done this year. All right. Straight up and to the right. Now sitting at 108.97, just under 109. Shout out to Brian Zarb, my good friend from Malta, who's a couple of days ago when the Dixie was headed straight up, he said, we are at resistance. And he called the top like almost to the minute when he posted that on Twitter. Brian Zarb of thetechnicalchartist.com. He's been on the channel before. Hello, Brian, if you're watching. Nice call, brother. So what this means is the dollar is worth more than other currencies. Why is that bad for U.S. companies in the stock market?
Ooh, I know this one. It's called currency headwind.
Go ahead, Mitch. Take it.
Currency headwind.
Currency headwinds. Yes. If you sell iPhones in Japan for Japanese yen, well, just because the dollar gets stronger doesn't mean the price in yen goes up that the Japanese are willing to pay for that iPhone. So when you convert those Japanese earnings to dollars to announce them on your quarterly report, well, Apple's earnings go down. So a strong dollar is bad for U.S. multinationals. We saw that last quarter. Almost every company that reported earnings in the second quarter reported currency headwinds. Didn't matter. Their earnings all sucked and their stocks went up anyway because the market just decided they were going to have a rally. But that did happen. It really hit their earnings. Well, the dollars continued to go higher. It looks like it still wants to go higher. We'll see what happens after next week. Um, but I got to send a shout out also to Brent Johnson and his dollar milkshake theory. And he's been saying because other central banks are loosening, like the ECB printing money to bail out Italy, while the Fed tightens with their rate hikes and their quantitative tightening, that's going to cause people to sell their euros and buy dollars, driving up the value of the dollar. He calls it the dollar milkshake theory. And he's been right. He's been very right since the start of this tightening schedule. A lot of people knock Brent Johnson because he's a little on the aggressive side. He's funny. He's funny with his aggression, but he's been right. So, I mean, it's kind of warranted, isn't it? Anyways, Mike, awesome comment all around. I agree 100%. I agree on 75 basis points. I think 4150 is a good target, and I think the Dixie is really going to hurt U.S. multinational earnings. So thank you very much for the support of the channel, sir. Appreciate it very much. And nice one there. And what do we got here? This is Mr. Hector. Okay, Hector, I'm going to try. Don't hold it against me. Acevedo? Acevedo?
Acevedo.
I'm going to say Acevedo. Don't call me avocado. Hector, thank you very much, sir. I appreciate
my Spanish training says Acevedo.
Aceveda? Fire your Spanish teacher.
All right.
I can hear Gigi in my head saying Acevedo. Acevedo. I don't know. Sorry, but thank you, Hector, very much. I apologize for the many, many butcherings of your name. Keep in mind,
both of us.
we gringos, we live in a single language environment. We don't get very much multilingual exposure here, and it exposes our ignorance. Just like the dollar spoils us, everybody is just expected to understand and speak in our currency. We're the same way with English, and it just we embarrass ourselves.
He just put Hector just put actually a pretty good comment in chat. If you want to look at it real quick.
There's Hector. Yep. Yeah, he says went buying groceries yesterday. Some products were 15% up from last month. Holy crap, Hector. Don't care what CPI say is impossible. Some believe in inflation is going down, except the CNBC bubbleheads. Well said, the bubbleheads. That's nicer language than I might use if I wasn't on the internet right now. I promise you guys, my language is not so refined in private. But you mentioned the CPI there. Let's bring that up real quick because Hector, I did a video yesterday about the beans and rice thing and the price differences in the beans and rice versus what I saw back in March when I bought them. All right. Because here's the reason why I bring this up. Food at home, according to the CPI report, is 10.9% year over year in the last CPI. Well, Hector, without knowing exactly what products you're talking about, we've got one data point from you that says 15% up from last month. Well, what's 15% month over month? If you annualize that, a lot more than 10.9% year over year. And I did my beans and rice and lentils, and I checked their prices versus 6 months ago, almost to the day. And I had 20%, I had 30%, 38% increases in 6 months. So what I'm seeing food at home is doing is like closer to like 60, 70, 80% year over year, not the 10.9 that CPI is telling me. I don't know where, I don't know where they get their numbers, folks. They call it CP Live for a reason. Now, I usually bang on the drum and I say it's owner's equivalent rent is how they lie to us about inflation. But Hector, you're queuing me up really nicely here. Thank you for the support of the channel again. And you're right, man, 15% in a month. And what I'm seeing, 38% in 6 months. It's a hell of a lot more than this 10.9% they're telling us on CPI.
And so, just so you know, 15% annualized is about 250.
250% annualized. One of these things is not like the other. So, yeah, I believe it. I mean, these food prices, they're going up. They're going up a hell of a lot faster than they're telling us going up. And, Joe Brown did a video yesterday. He did a short, and he's talking about how Jerome Powell was warning us we're going to need Paul Volcker-like rate hikes in order to, or if we don't, what did Joe say? He's saying if we don't hike rates now, we're going to have to be like Paul Volcker later in order to prevent inflation of the 1970s. Well, inflation is already worse than the 1970s. They're just lying to us about it. So when Powell says we need to be aggressive now so we don't have to be Paul Volcker later, It's already too late to be Paul Volcker now to stop the 1970s inflation. People don't realize how bad this is. And it's not, look at these numbers, 15% over last month, 30% in 6 months for freaking beans, man. We're not talking about a Mercedes or a luxury condo. We're talking about beans, which are freaking delicious, by the way. People always make fun of me, like, Jack, you make a decent living. Why do you eat that? Like, because it's
So
delicious.
I do like a good bean, but not to the point where my dad would actually put cold butter beans and mayonnaise on bread and eat it like a sandwich. I couldn't do that.
True story. When I was in college and when I was a fisherman, I hate doing dishes. I mean, like with a passion, I hate doing dishes. I'll do them. I'm a little more civilized than I used to be. Because I hated doing dishes and because beans are so delicious, I would use a can opener and a spoon, and that is all I needed to feed myself. I would crack that can open. I would not heat it up. I'd eat them things cold right out of the can with a spoon. Like, people would leave the room when I was eating because they just couldn't be around me and watch me eat. It was so good. And I'll go do that right now. Serious. Like, if you dare me, no, don't dare me, because I'll do it, because I'm getting hungry just thinking about it. And Gigi will yell at me. I need to be more civilized than that in my old age.
Nah.
But man, I love beans. So, like, when it's time to, like, hedge against inflation, I'm like, great, I got an excuse to go buy dozens of pounds of dried beans. Fantastic. We're eating good tonight. I'd eat that anyway. So I guess I get off cheap here. Is what I'm saying.
Well, you want to do one last tour through the indexes?
Yeah, and I can't skip over Free Like Summer. Thank you, Free Like Summer, for the support of the channel, sir. And I have no idea what a BGN is. I'm learning more about Forex currency reverse from Super Chat than I am from my studying of markets. What is a BGN? I have to look that up real quick.
Belgium,
BGN
maybe?
is okay. That's the Belgian liv. Am I saying that right? No, the Bulgarian liv. Okay, it's from Bulgaria. Well, thank you, Free Like Summer from Bulgaria. I appreciate that. I learn something every day. So thank you for the super, sir. Again, nothing to say, just being a big help. I appreciate it very much, sir. Thank you, guys. I appreciate all the super chats and the support of the channel. And Mish, you are right. It's time to make a trip through the indexes. Let me make sure I bring up the right indexes, because I don't know what I was looking at before. Okay, the S&P looks like we closed up. Mish, go on mute. You got a little bit of wind going on right there. We are up 61.2%, or 1.53% at 4,067 for the S&P. Let's see what we got on the Dow. We are up 377 to close out the week on the Dow at 32,151, 1.19%. And lastly, the Nasdaq. Where are you, Nasdaq? Get over here. The Nasdaq closed. No, that's that wrong one again. Sorry, not going by that one. I don't know what's going on. Okay, I've got the Nasdaq Composite closing at 12,112, up 250 points on the day, 2.1%. So good day, actually good week for markets. Closed in the black, in the green for the week. We've got a big week next week. We've got CPI earlier in the week on Tuesday. We will be live streaming the CPI report, as we always do, at 8:15 in the morning. Oh, those live streams are painful. They're painful. We need a lot of coffee Tuesday morning. But won't you join us for CPI? We'll see if we can get a CPI preview done over the weekend. I got a lot going on this weekend. That might not happen. But what else we got next week? And then we've got the doubling, of course, of quantitative tightening. So a lot happens next week. Don't buy into this nonsense about peak inflation, folks, because inflation has not peaked. It's coming back, and it's coming back big. And thank you, Civil Guard K9 LLC. Boy, that is a get some kind of name, by the way. Civil Guard K9 LLC. I am intimidated, sir. That is a cool freaking name. But he says, Jack, the EU bank liquidity bailouts are coming just in time for mortgages to default. Will the Fed follow? I say yes. I don't think the Fed is ready yet. And here's why. I was alluding to what Jerome Powell was saying in that video that Joe Brown did about how, we need to act now so we don't have to be Paul Volcker later to prevent the inflation of the 1970s. Jerome Powell and the guys at the Fed, they know inflation now is already as bad as the 1970s. They also know it's going to get worse this fall because they know energy prices are going higher. So I don't think the Fed is going to pivot anytime soon because the Fed knows inflation is much worse than they're telling us. We know inflation is much worse than they're telling us. So the Fed, they're worried about inflation expectations. The reason why the Fed has a 2% inflation target is because that is the level of inflation where the frog doesn't realize he's being boiled to death. Right? 2% inflation is how they kill the middle class slowly from the 1970s through the 80s, 90s, and early 2000s. By giving us 2% inflation that didn't have our wages going up with it, we didn't realize we were slowly being bled dry until the middle class was already almost extinct. Well, now we realize it. Now the inflation is so bad. And as soon as we start to realize, we being the general public, once we realize how incompetent our leadership is, and we realize this inflation is not going away, that's when everybody runs out and they buy their beans and rice all at the same time. And they buy all the gasoline they can possibly fit in their car and their gas cans and everything else. And they race to dump their currency. That is von Mises crack up boom. That's when inflation expectations become unanchored, as Jerome Powell would say. And that is a self fulfilling prophecy. Once people believe inflation will keep getting worse, inflation is guaranteed to get worse because people make it happen through changes in their spending patterns. That started to happen in the 1970s, and Volcker had to raise rates ridiculously high to convince people that wasn't going to happen anymore. That's what Powell has to do. It's already too late for Powell to do that. They're just lying to us about how bad inflation is, even though, like, look at what Hector said about his grocery bill. Like, people know obviously inflation is so much worse. So they can't start injecting liquidity yet. It will kill the dollar. And, like my dad mentioned in that comment with Mark Moss's channel, they will protect the dollar status as reserve currency, even if it means starting wars. They'll definitely do it if it means putting us in the poorhouse. They don't care about us. They'll pretend to care about us. But, there was that one guy saying, yeah, we're going to take unemployment to 5%. That's a sacrifice we're willing to make. We governors who sold our stocks at all-time highs in the market last August, and now we're putting people out of work. They're getting rich off of it. So I don't think the bailouts, I don't think the pivot is coming anytime soon. I really don't. Things have to get so much worse before we get there. And look, maybe things are about to get so much worse. I don't know. Nobody knows what happens after next week. Nobody knows. I want to drive that home. You're going to have a lot of people who are going to be pretending to know. Nobody does. It's never happened before. All right. All I can tell you is the pivot doesn't come until things get way, way worse than they are right now. Okay. And that's a long way off. So thank you very much, Silverguard K9 LLC, for your awesome name and for the super chat, sir. But yeah, I agree. The EU, they're going to, speaking of EU bank liquidity bailouts, why are they bothering to raise rates if they're printing euros to bail out the southern countries and they know they're going to have to print euros to bail out their banks to protect their utility companies? Like, what's the point of raising rates if you're engaged in quantitative easing? I was talking to Mish about this before we started. Like, that's like stepping on the gas and the brakes at the same time in your car. Right? Something's going to break. You're going to mess things up if you do that. I don't know what's going to break or when it's going to break, but if you drive around with your feet on both pedals at the same time, something in your car is going to break. That's what the European Central Bank is doing to their economy. Their economy is the car. The brakes, that's the rate hikes, and the gas pedal, that's the QE. And they're doing both simultaneously. Something's going to break. Anyways, thank you very much, Civil Guard K9 LLC. Man,
Hey, I'm going to break in here.
Go
say
ahead.
condolences to Cheeseburger. His grandmother just passed.
Oh, I'm sorry about that, Cheeseburger. Sorry for your loss, brother. And you will be in my prayers. Sorry to hear that. I hope you and the family are well. And that's unfortunate, folks. And that puts things in perspective. Things are going to get bad economically, folks, but always remember to take a minute and think about how good you have it. And the reason why I do a lot of this, why I study markets and why I try to prepare financially is because I care about my girls. I care about keeping things straight and narrow here at home. And this is the way you do it. You have to know this stuff if you want to be prepared and if you want to take care of the ones you love. So, Cheese, my heart goes out to you, brother. Hang in there. And guys, I think we're going to call it here. We've been going for the better part of an hour and 15. I want you guys to have an awesome, awesome weekend. Remember, big things happening next week. Mish, you got anything you want to add?
Oh, but no, yeah. So remember, we're still running the. If you can find Mish in the wild, you get a mark. Mish mark. You get a Mish mark.
All right. If you find Mission in the wild, you get yourself a Mercury dime made out of 90% silver, otherwise known as constitutional silver. Don't call it junk. All right, guys. I want you to have an awesome weekend. Thank you to my Patreon supporters. Guys, I really appreciate everything you do for the channel. Thank you for all the super chats, guys, for your generosity. Thank you for your comments and your feedback. Thanks, Mom and Dad. I love you guys. And until next time, live small and dream big.